August 1st, they pay. And everybody pays, everybody has to pay, and the incentive is that they have the right to deal in the United States.
It seems as though the latest installment of Donald Trump's tariff war is that America has declared war on the PBS, and there's a proposed 200% tariff on Australian pharmaceutical. How do you think Australia should respond?
They shouldn't respond at all. I think the worst thing you can do, in fact, is to levy a tariff, countervailing tariff on the country that's the tariff on you, because everyone gets hurt in a tariff war and you're just making it worse.
And so I guess in your experience, is there any precedent to what we're seeing from America at the moment in imposing these tariffs and then pausing them and then changing them? The uncertainty for me is just unbelievable.
I agree. There's two parts to this. One is that they have had a tariff war in the past, and the US imposed a tariff in the 30s called the Smoot-Hawley tariff, and that occurred at the same time as the Great Depression, and a lot of people think it made it worse. That's evidence, and tariffs generally hurt countries, hurt consumers, hurt firms within countries. Secondly, the uncertainty is even probably more damaging than the tariffs themselves. Part of the reason you might ask the question, why are they doing it? Because the damage is quite significant when you don't know what the tariff will be, when it will change, when it will be implemented. I think it might be trying to confuse the financial markets, because the first attempt at this after April the 2nd caused quite a significant adjustment in US bond markets. And if you completely introduce chaos into the financial markets, perhaps they just think it's all going to go away.
Yeah, I thought it was going to go away. It still keeps hanging around, though, and it changes on a daily basis. In terms of that uncertainty, can you give us an idea of how it impacts the global economy?
Well, so tariffs themselves increase the price of imports within the US economy, which means people will buy less imports. Prices of imported goods will go up, which feeds into production processes and consumption bundles. So American consumers have less money to spend because they're spending more on either imported goods with a tariff or domestic goods that are more expensive. Those goods would have been produced by other countries, so the demand for their goods goes down. And then the question is how severe that negative income effect globally is compared to the impact on particular sectors. The thing with tariffs are that their tariffs themselves are differential across sectors, but also the impact of tariffs are very different. If you're a traded good, if you're a manufacturer in the US and you incur a tariff on imports, that's equivalent to you having a price increase on your exports, which means it's well known in economics that a tax on imports is a tax on exports.
What is the most compelling argument for why countries don't usually do this?
Well, again, comparative advantage is a fairly fundamental concept. Countries that are really good at doing something should do that and then sell those products to other countries and then bring in products that they're not quite as good at making, and therefore everybody's better off. That's why opening the global trading system after the Second World War led to an enormous increase in global wealth. So that's the basic concept, is you do what you're good at. What tariffs do is it changes what you're doing, and in fact you're no longer doing the thing you're best at, you're doing the thing that some government price signal has encouraged you to do.
And now, you're a former board member of the RBA. Of course, we had the shock decision to keep the cash rate on hold yesterday. And, you know, a lot of people talking about to what degree the tariff uncertainty played into that cautious approach from the RBA. Can you give us an idea of how closely the Reserve Bank would be monitoring the tariff situation and factoring it in to a decision that's also based on consumer spending, jobs, the job rate, and other factors like that that are domestic issues?
So, in fact, the domestic issues would be dominant, and I think the decision the bank made was the correct decision. Why do I say that? Well, we have unemployment at 4.1%. We have inflation adjusted at the top of the band at 2.9%. More importantly, though, is if you look at the nominal spending in the economy, what we measure as nominal GDP, it's growing at an annual growth rate of 4.6%. Now, the question then is, you would think your neutral interest rate would be close to your nominal growth rate. The neutral interest rate is somewhere with a 4 in front of it. So I think commentators have got it wrong as to what's happening in the domestic economy. The last time we saw this was during the aftermath of COVID, when we had that inflation surge. It was preceded by an increase in the growth rate of nominal spending. So the economy is actually got more price pressure in it than you get from the CPI, partly because the CPI has the energy subsidies in it, which dilute the prices, but that fixing of the numbers doesn't show up in the price index in GDP. So I think the domestic economy doesn't call for an interest rate cut. On top of that, there is uncertainty about the global economy. And I was on the board during the global financial crisis. We actually raised interest rates just before the John Howard 2007 election because the housing market was overheating, inflation was rising. There was concern about the world economy, but we still raised interest rates. And then when the concern was realised, we cut interest rates sharply and avoided a recession in Australia. So it's very important to get those calls right and to understand you don't react to an anticipated shock. You're ready to act when an actual shock comes along.
Yeah, I think that's a very important point to make. And I think in terms of reacting to the global tariff situation that we find ourselves in now, we talk a lot about the doom and gloom of it all, and the uncertainty plays into that. But are there opportunities as well?
Well, I think there are. In the work we've done at the Peterson Institute, Australia's direct impacts until the announcement of pharmaceuticals, which is our second biggest export behind meat for hamburgers. Before that tariff, Australia was actually mildly negative impacted. And it was mostly because of what was happening to China, because our exports of iron ore to China were impacted by the size of the tariffs between the US and China. The second round effects then were actually quite small. One of the scenarios we looked at is what if people lose confidence in the US economy and start to pull capital out of the US economy? That actually has a positive impact on Australia. Just as we saw during the Asian financial crisis, when capital left Southeast Asia, it came to Australia and the US and Europe, and it lowered long-term interest rates and stimulated investment. And so we get a positive effect from a loss of confidence in the US economy on the assumption that Australia gets the policy settings right.
Mm. And now I'll let you go, Warwick, but before I do, just to sum up, when we think about the tariff situation, should we be taking the approach that it's best to be alert, not alarmed, or are we getting to a point where alarm is the appropriate response?
No, I don't think we should be alarmed. I think of all the countries, Australia is best placed to weather this. We have a very flexible, although it's become a little bit more rigid since the Labor government came in, but a very flexible economy. We have a floating exchange rate. We have a strong central bank. We have a good balance sheet in the banking system, good regulation. We have enough capacity to do fiscal policy if we need to because our debt to GDP ratio is not very high. And basically, most of our future trading growth will be in Asia. That's where this growth centre of economic growth is. In India, Southeast Asia, Asian economies. So really, this is just accelerating a process which was already underway and is still, I think, in Australia's interest to diversify and be ready, but actually not to sort of react in a destructive way, which only makes things worse.
Yeah, well, I feel better than I have for a long time talking about this topic. So really appreciate your insights today, Professor Warwick McKibbin. Thanks for joining me on Newsworthy.
That was great. Thanks very much, Ben.